So the Federal Reserve says that they expect zero progress on inflation this year in 2025. They're saying that progress has been delayed and they're blaming the tariffs. So I want to show you.
I do think with the arrival of the tariff inflation, further progress may be delayed. The SEP doesn't really show further downward progress on inflation this year, and that's really due to the tariffs coming in. So delayed, but if you look at our forecasts, we do see ourselves getting back into the low twos in 26 and then down to 2 by 27, of course, highly uncertain. So I see progress having been made toward that, and then progress in the future. I think that progress is probably delayed for the time being.
Okay, so I'm showing you the highlights of the Federal Reserve FOMC meeting that took place on Wednesday, March 19th. Now, I want to bring this to your attention. So if the Federal Reserve is saying that they expect no progress on inflation, right, like none this year, then why are they going to cut interest rates? Why are they planning to have 2 rate cuts this year then? So I want to show you what Powell says.
If that's the case, why are there cuts in the SEP for 2025?
So again, people wrote down 2 cuts the last time, and they look at they wrote down meaningful decline in growth from 2.1 to 1.7 in 2025, a tick up in the unemployment rate, so not much there, but core inflation up by 0.3. And so those kind of balance each other out. So people, not everybody, but on balance, people wrote down similar numbers. The changes aren't that big. The other factor, though, as I mentioned, is just really high uncertainty. What would you write down? I mean, it's really hard to know how this is going to work out. And again, we think our policy is in a good place. We think it's a good place where we can move in the direction where we need to. But in the meantime, it's really appropriate to wait for further clarity. And of course, the costs of doing that, given that the economy is still solid, are very low.
Okay, so you just heard what Powell said, and I'm going to do my very best to try to explain or translate in plain English what he just said. So the situation or the setup is that inflation is not going to improve at all this year in 2025. So if that's the case, then why are they projecting that they're going to cut interest rates 2 times this year? It's a good question, right? So the reporter is basically saying, make that make sense. So here's what Powell said. You have to understand that at each one of these meetings, they don't give projections. It's just at like some of these meetings, okay? So last time that they gave projections was back in December, and then they just updated those in March at this March meeting. Okay, so back in December, they projected that they're going to cut interest rates twice, 2 times this year in 2025, okay? And then March rolls around, March meeting comes around, and like this is news to them. They're like, wow, inflation's not going to improve this year, and they're going to blame it on the tariffs. So if inflation's not going to improve this year, that is a reason to not cut interest rates, right? But then they're also projecting that the economy is going to get weaker and the unemployment's going to go higher, and those are reasons to cut interest rates. So basically, Powell's saying that there's these 2 competing forces, a reason to not cut interest rates and reasons to cut interest rates, and they're going to offset. And Powell's saying that if they offset, then, well, they projected 2 rate cuts back in December. These 2025 forces are going to offset, so they're going to stick to, 2 rate cuts. That's his logic. Okay, now in this video clip, I'm not going to translate anything. I'm not going to explain anything. It's very straightforward. Jerome Powell and a reporter, they're talking about the price of groceries. So you can tell me what you think in your opinion. I'm just saying that this requires no translation.
Kelly O'Grady, CBS News. So consumer sentiment has dipped dramatically, but you say the economy and the hard data is still solid. What is your message to consumers that clearly disagree and don't feel that strength? Because the hard data they're looking at is their grocery bill.
Okay, so a couple things. The grocery bill is about past inflation, really. There was inflation in 21, 2, and 3, and prices went up. The current level, it's not the change in prices. It's they're unhappy, and they're not wrong to be unhappy that prices went up quite a bit, and they're paying a lot for those things. So I think that is the fundamental fact, and has been for a long time, a couple of years, why people are unhappy with the economy. It's not that the economy is not growing. It's not that inflation is really high. It's not that unemployment is high. It's none of those things. We have, 4.1% unemployment. We've got 2% growth. And, it's a pretty good economy. But people are unhappy because of the price level. And we completely understand and accept that.
Okay, now I want to show you this video clip of Powell responding to a reporter that's asking about a potential recession. So I want to show you what Powell thinks.
Well, just to follow up, yesterday, the UCLA Anderson forecast said there's high probability of a recession. Where do you stand on whether or not the slowdown you're seeing creates a higher probability or concern that you may have on recession? Thank you.
There's always an unconditional possibility of a recession. It might be broadly in the range of 1 in 4 at any time. If you look back through the years, it could be within 12 months a 1 in 4 chance of a recession. So the question is whether this current situation, those possibilities are elevated. I will say this. We don't make such a forecast. If you look at outside forecasts, forecasters have generally raised, a number of them have raised their possibility of a recession somewhat, but still at relatively moderate levels, still in the region of the traditional, because they were extremely low. If you go back 2 months, people were saying that the likelihood of a recession was extremely low. So has moved up, but it's not high.
Now, I want to show you this video clip. I thought that this was very interesting. So Powell is saying that, you can tell me how you translate, but what I'm seeing is Powell is saying that he's not confident about what the Federal Reserve is forecasting. He's saying that he's confident about how agile or how quickly that they can react if they need to change their game plan. I mean, take a look. That's my translation, but let me know what you think.
Simon Rabinovich with The Economist. Thank you, Chair Powell. Several times today you've said that you feel you're well positioned to wait for greater clarity. At the same time, you could point to quite a few growth risks at the moment. We've seen a stock market that's gone quite wobbly, rapidly cooling housing sales, plunge in confidence surveys. Today, not only did the S&P mark down the growth outlook, 17 of 19 see risks to the downside. So my question is, how confident are you that you're well positioned, or is that one more thing that you're uncertain about?
I'm confident that we're well positioned in the sense that we're well positioned to move in the direction we'll need to move. I don't know anyone who has a lot of confidence in their forecast. I mean, the point is we are at a place where we can cut, or we can hold what is clearly a restrictive stance of policy, and that's what I mean. I think that's well positioned. Forecasting right now, forecasting is always very, very hard, and in the current situation, I just think uncertainty is remarkably high.
Okay, now I wanted to throw this one in there. So a reporter asked about the stock market. Basically, are you concerned about the stock markets? I want to show you what Powell says, what he responds with, and then I want to give you my opinion after you see the video clip.
Just on the stock market has obviously declined significantly since the Fed last met. Are you concerned at all about some of the market volatility having a real economic impact in terms of hurting business spending or consumer spending, especially among higher income households?
So financial conditions matter to us because, financial conditions are the main channel to the real economy through which our policy has its effects. So they're important. But what matters from a Fed standpoint for the macro economy is material changes to overall financial conditions that are persistent, that last for a while, long enough to actually affect economic activity. So that's what we're looking for. I'm not going to opine on the appropriate level of any market, equity, debt, commodities, or anything like that. And I would just point you to the bigger picture again. The real economy, the hard data, are still in reasonably good shape.
Okay, so you just saw how Powell responded. But let's just speak honestly. What is the reporter really asking? The real question is, if the stock market crashes, are you going to come to the rescue? That's the real question that's being asked. So Powell says, he uses technical language. He says, what matters to the Federal Reserve is if there are material changes to overall financial conditions that affect economic activity. So my interpretation, what this means is that if there's a stock market correction or a crash, if it's short-lived, then the Federal Reserve is not going to get involved. If the market goes down 15%, 20%, and it just rebounds quickly, then the Federal Reserve is not going to get involved. But if there's a deeper crash, and this affects economic activity, if it affects retirement accounts, if it affects consumer spending, then it appears that the Federal Reserve, yes, they are prepared to come to the rescue, because Powell could have said that it doesn't matter what the stock market performance is, it's not going to affect their decisions, but he didn't say that. He gave the answer that he did. Now, I want to end with this. So if you want to see the Federal Reserve's projections, like their SEP, their Summary of Economic Projections, I made that video yesterday, and I will leave a link for that video down below. So please check that out. Thank you so much for the support. Please subscribe. I'll keep you updated and wish you a very nice day. Take care.